Hi, good afternoon, everybody, and welcome back to Series 5 of the Climate Pioneers Show, Funding a Better Future. Throughout the course of this series, we are focused on angel investing for impact, digging into why angel investment is such an important part of the early fundraising journey for a founder, and trying to help them prepare for the challenges that they may face along the way. We're also going to explore the lack of gender equity in the world of angel investment, why climate can be a wise investment strategy, and how you could begin your own angel investing journey. So whether you're a founder looking to raise angel investment for the first time, or whether you are an aspiring angel investor yourself who's keen to learn more, there hopefully should be plenty for you to get stuck into throughout this series. Today, we are joined for episode 3 by two fantastic guests. Marla Shapiro, founder of HERmesa, a female-led angel investment syndicate with a mission to drive up the number of women with a seat at the table. And David Fogel, co-founder of Alma Angels, a community of angel investors, both male and female, who are actively committed to investing in ambitious female tech founders. So thank you both for joining me. When I was doing a bit of research for this episode, I actually noticed that your respective syndicates and communities were launched at very, very, very similar times, right? So I think, as I mentioned in the build-up to this call, about 2 months between them. Alma in November 2019, HERmesa in January 2020. So there was clearly something in the water at that time, right? Can you give us a picture, Marla? I don't know if you want to take this one, but give us a picture of what was the state of gender diversity in the world of angel investment at that time? Like, what was the problem you set out to solve?
The overall, thank you, first of all, for having me. The overall problem was the problem that we still face today, which is a fraction of the people writing checks are women and a fraction of the people getting money are women. I think the spark, so I came to angel investing after sort of a couple of careers. I started on Wall Street, but it didn't take, but I do have a finance background, structured finance background. But most of my career was in the media tech space, in big companies, whose business model was destroyed by the internet. And then ultimately I was head of commercial for 3 media tech startups, selling back into those old line businesses. And then I started angel investing. So my entire career, I was always the only woman at the table. And after, I started actually angel investing with the Green Angel Syndicate, fantastic investors focused on the climate crises. And I loved it. I mean, literally, I wrote my first check and I'm like, when can I do another one? Hang on there. But within 6 months of being an angel investor, I knew every other woman doing climate tech investing in the UK. And I thought, this is just nuts. Like, how can at this, whatever, I'm now on my 5th career, be the only woman still at the table. So personally, that was the spark and I was like, somebody should do something about this. And nobody was more surprised than myself when it turned out to be me. So that was kind of the start.
That's great. And so what about you with Alma? What was the problem you were recognizing, and what was your role and journey into solving that?
So we're 4 founders at Alma, and I'm the token white guy because you always need one. There's not enough of us, apparently. But I can talk more to my own personal story, because we all, Deepali, Ella, Christine, and now Roxanne, we all have different ways to get to it. But personally, for me, it started with the Me Too movement in 2017. I was a partner in the fund. And I remember I was very taken aback and like enraged with everything happening. I was like, how can this happen? And, having a discussion with my wife, she looked at me weirdly, like, men with money and power, what did you expect would happen? It's like, and I was like, yes, a bit naive and probably privileged position from my end, because it's not only in this industry, but this is my industry. We should, VC and tech is like meritocracy. It's all those values that we talked about. And as part of that, I decided to basically do stuff. I said, if I want to see the changes, I believe in the values that we should live towards. We, as 80% of the industry is middle-aged white guys such as myself, let's actually start doing stuff instead of just talking. And at that time, I said, okay, I'm going to work with every female founder that works in tech or in IP-driven businesses, which is my expertise. And I said, let me work with them and introduce them to investors, give them feedback. Half an hour, everybody that reached out. And I was like, yep, I'm in. And then over a 2-year period, I got exposed to the shit show I call Fundraising Will Being a Woman, which is surprisingly completely different than Fundraising Will Being a Man. The number of women that entrepreneurs that I work with that came back after meetings and more or less said something like, and then he said, let's continue this discussion in my hotel room.
Oh my goodness.
Are horrendous. And from my own personal experience, and I work with dozens and dozens between 2017 and 2019, under 100, but close to 100 female founders, 90% of them were sexually harassed during fundraising at least once. Okay. And I literally don't use the word proposition because they're like, it doesn't really matter. It's like sexually harassed. You should not have any kind of innuendo towards that. Right. And I was like, what's happening? And you talk to most men in this industry, it's like, what, so much, so many? And yes, every woman that is fundraiser is like, yeah, of course. And it was so that dissonance between the experience of men and women was really alarming. But you can't change the industry, and you don't go to a 65-year-old person and say, well, shame on you. This is not the values your mother taught you. How do you change it? And my insight was similar to what Marla said. Oh, let's go, especially in early stage, investment is about, do we connect? Yes, the business needs to make sense. I need to believe that you can make money, but I want to connect. And nature built us in very similar ways, which is, if we look alike, we're probably going to easier connect. That's why 65-year-old guys invest in 25-year-old guys, because they can do, go play golf, beer, whatever you want to do together. So the insight was, oh, let's diversify the pool of check writers, the people I refer to. And as a partner in the fund, I was like, oh, let's just reach out to all the partners I know and basically ask them who are the women angels they recommend and work with. And I reached out to about 15 different funds. And I kid you not, out of 15 funds, almost everybody to the letter came back with the same 5 names. That's 2019. And 2 of them, which I know personally, are amazing advocates of diversity, but they've written 1 check in 5 years. And then I realized, and this was, again, 2019, at that time, Deepali and Ella were, Ella runs Zinc, and Deepali now is a partner in Speed Invest, but she was running angel investor syndicates before. They were trying to organize a breakfast for angels, female angels, and founders, because they had a lot of women founders and they couldn't find any angels. And we started talking about the problem. And what we realized is that there's not a place for them to get together. And we did some customer development. We basically reached out to women such as Marla, that are impressive CVs, super experienced, and probably have enough money to invest, and just started asking, are you angel investing? No, why not? Yep. And you see a really fast pattern, which is they don't see 90% of the deal flow. And there's nothing malicious about it, but angel investing is very network driven, and most angels are men. And when they share deals, it's not really conscious. You just share with your mates. And most best friends of men are other men. And it's still happening today, because it's really funny. So we have a very prominent woman that works in a big firm that moved to the UK from the US, and her partner works with her in the same firm, but he moved 6 months after. And she said, a month after he moved, my colleague sent him a deal. And I was like, he doesn't invest, I do. Why did you send it to him? And he was like, I don't know. He was like, the first in my head. And I literally invest. But there's a natural network effects of men approaching men. And again, it happens with women. You feel more comfortable approaching women that you know than men that you know. Yeah. But the problem is, how do you diversify that and break the barrier of access? Yeah. And the second part is that if you want to start angel investing, men tended to be perfectly fine with, I don't know how to do this, but here's $5K, let's figure it out. Most women were like, wait, this is a commitment. How do I help a founder? How much time do I need to put into this? How much money do I need to put aside? And I'm being very cautious here, because it's not about risk. It's about commitment and taking this on.
Yeah.
Every woman that actually has started angel investing took that and is fully on this. And it takes a lot of time to build a portfolio. But till she answers the questions, she won't start doing it because she doesn't know what involved with this. And there was no place where she can feel comfortable, because angel investing, and Marla is like knows this.
Yeah.
It's learning by doing.
Yeah.
Well, this is exactly when I started investing. And as I said, when there was in this room, I was at an event with 100 people. And the man who introduced me to angel investing, a family friend, fantastic investor. And when I asked him, how did you start to invest? He's like, I started writing checks. Like what was even the question? Like, I started small, and I started on Crowdcube, and I started learning, and then this, found my way to the syndicate, and now he's a fund manager, fantastic investor. Another woman in this, of the 10, literally 10 in a room of 100, and who I hadn't met. I think she was like the one I didn't know. And I was like, oh my God, tell me how you started. And it was like one course after another course. She's a fund manager, fantastic investor as well. But that's the thing. Women, and again, I hate when we talk about us as a class, and we will do that in a sweeping way, I'm sure, on this podcast. But the thing about that, women don't apply for jobs unless they meet 100% of the criteria. It's the same thing when women do anything new. And so, again, it's not that women don't take risks, but we want to fully understand the risk. And in fact, we can talk a little bit about where we slightly differ. I think, again, we're cousins, Alma and HERmesa, we're very close. But I think probably there's a saying that women over diligence, but I don't think we over diligence. I think we want to fully understand, right? Yeah. And so it's about, how do you get people comfortable? And I think both of our communities are very focused on this. How do you get people comfortable stepping into something new? How do you get them comfortable learning by doing? How do you support them without making them take a course and qualify?
Amazing. And you've both referenced there that at the point at which your respective organizations launched, that the situation was fairly dire, right? A small handful of female investors that all knew each other. But to kind of put that into context, I guess, for anyone listening to this who doesn't understand the gravity of that situation and of how few there were, when you say a fraction, can you kind of put a guideline number on that for us? So back in 2019, 2020, what % of angel investors were women, roughly?
I think it was 12%, and now it's 14%. Right. But if you look at how many angels have written checks in more than 10 deals, and David talked about the need to build a portfolio, and we can talk about that in a lot more detail, only 6% are women. So I don't know, David, do you remember what the numbers were back in the day? I don't think we've moved them enough, is what I'm saying.
Have we moved them? No.
One of the challenges is writing one check is not enough, but it's enough to get the title of angel. And this is why part of the mission of Alma is, we don't care how much you invest. The membership in Alma is free, but you have to take a pledge that I have the money and I'm able and willing to invest in 3 female founders over the next 12 months. Because what we want is for you to build cadence. Angel investing, if you really want to make money, and we all want to make money, it's about actually investing at scale, because 90% of startups do fail. It doesn't matter. The earlier you get, the biggest chances of failure as an investor. So you need to build a portfolio of 15 to 20 at least over the next 4 or 5 years in order to be able to even see money back. And if you're only thinking about one of the aspects, which is like putting a check in, it's probably not enough. There's a lot of good people doing that, but people who systemically, if we're thinking about changing the system, we need to create thousands of people, women and men, that look at investing in a different way, which is on a recurring basis, on a scale basis. That's how you change the impact.
Why do you think that is? Why do you think there's such a proportion? And is it a higher proportion of women that only write one check and then don't write a follow-up one than men? Is that more of a female trait than male? Again, not putting us into buckets in too much of a sense, but
I don't have the data on that, David. I don't. Do you?
So you're asking 2 data geeks to put numbers, and we're both like super hesitant. I think I wouldn't say there's a nominal and percentage-wise. Percentage-wise, I don't think there's that big difference between women and men, because there's been a trend over the last decade where you see a lot more, like even the ability to invest small checks has been increasing, but even if you look at Crowdcube, how many people there recurrently invest? Not that many. I think there's a difference between commitment. What I do see as a pattern is, and we see this most on Alma, people start with small tickets, but then grow them the more confident they become. So you move from a 5K ticket to 10, 15, which you become comfortable with after 2 years because you understand the dynamics, your own personal capacity and capabilities. And again, there will be people who just see a cool startup or a cool founder they believe in and say, hey, here's 5, 10, 50K, and never do angel tickets again. But what we want, if the purpose is systemically to change, we need to increase the ability to do it systemically and allow people to build conviction, personal conviction, and their ability to deploy capital, to invest.
And what do you think has held back women from entering the world of investment? One of the things you mentioned there was around not having visibility of that deal flow. But what are some of the other factors that come into play that stop women even necessarily seeing this as a path that they could take?
Marla?
You can't, it's such a trite line. You can't be what you can't see.
Yeah.
How many people, I'm sure, David, you have the same, come to me and say, I didn't know I could do this. I thought that it was for, and whoever that other person is either a mythical woman who, has 12 million in disposable assets or is a man, right? Like women who come to me are like, I didn't know I could do this. I didn't know, like, how do you do it? Like, it's literally, and so I think, so I think there's two things. I think visibility is hugely important, and we need to tell stories which, I'm not as good as I should be on social media, but we always try to highlight our investors, the members of the month, trying to basically show, hey, these are women who are check writers. You could be like them. But I think the second thing is visibility is one thing. The next thing is a path. And there needs to be many HERmesas and many Almas. I think inspiring and visibility and knowledge is good, but a path to action and somebody to kind of hold your hand on those first few steps is what creates action and creates repeatable action, repeatable check writing, knowledge building, network building. And without those two, they have to go together. And I think I really was very struck by okay, I can be an angel investor. Now what? And I felt at the time that there wasn't the now what path. And clearly, David and DePauli and everyone saw the same problem. But again, there is room for so many of us in this market, all maybe investing slightly different thesis, slightly different approach. But my goodness, we need to flood the zone with women investors, women syndicates, women voices, women advocates, women role models. And I think that's ultimately what's I hope, going to drive change.
Yeah. And to your point,
everything she said, 100%, yes.
What you said earlier about the smaller tickets, David, I think was a really valid point, because I know I began my angel investing journey back in October last year. And one of the things that triggered me into thinking, I mean, I've wanted to angel invest for a long time prior to actually taking action, but just always thought it was something I would do in the future. I thought you had to have lots more disposable income than I had at the time. I thought you had to be really rich and really grown up. And it was only after a number of conversations with other people that were angel investors and were writing small checks that I even realized small checks was an option, right? That you could start with a pot of 10K and make 2 5K investments or 5 2K investments and slowly build a portfolio over years. And that's fine. That's doable. And to me, I thought you had to have 50K to even start, right? And I still think perhaps we don't talk about that enough. That, like, the fact that you can start small and it's just building it up over time, right?
I think this is the value where, like, not just Alma is nice, but like syndicates as a whole can help you a lot more. Because the challenge people assume with writing small tickets is, but will it be helpful for the founder? And the answer is 200% yes, because especially when you're an angel, what really matters is the vote of confidence. I believe in you. And if you put a 5 or a 10K, or unless you're really going to 100 to 200, most people do not do that. Like, it really doesn't move the needle on a startup that needs to hire 10 people. I mean, it's nice in terms of capital, but then it's all about aggregating the capital. As an individual and as a founder, like having somebody look at me and say, I believe in you, here's my money, my hard-earned money, makes all the difference. And you can talk to founders, and many of them talk about one of the angels that was the most prominent for me was the one that wrote the 5K ticket, because they care and they believe in me and they were there when I needed it and pick up the phone, and then they advocated me to then network. And that 5K suddenly brought me $500,000 over the next 6 months. So
I think, sorry.
Yeah, no, go ahead.
No, I was going to say one other thing that we, so HERmesa also started with quite small checks. And I'll be honest, I had a thesis that if we could, exactly what David said, people would start small and build. But actually, that hasn't worked so much in my community. What we found is that people come in, or maybe we haven't been operating long enough, but what's happened is by keeping that minimum really low, we have been able to drop the average age and change the complexion, literally the complexion, but like who is an angel investor in our community? They're women probably 20 years younger than sort of the average age of angels, both men and women in the UK. And over half of them are entrepreneurs themselves. These are people who maybe haven't had that liquidity event, but they know exactly what it's like to raise money, to build. Yep. So what we always say is that everybody, mesa being table in Spanish, everyone who sits at our table has equal value. And that 2,000 pound check, or the 20,000 or 70,000, whatever the check is, but sometimes that 2,000 pound check is the most valuable because that's the woman who's 2 stages ahead of you in fundraising. She knows what needs to be done. So I think that is, it's both a belief, but when you democratize, if that's the right word, access to this asset class, if you make it low enough, then you really can capture diverse investors who can help you. But above and beyond the belief, which is hugely important, and above and beyond connections, which are equally important.
And are there different trends in how women invest, or what their motivations are when investing? And yeah, Marla, do you want to take that?
So we're a gender lens investment group, right? So we could theoretically invest in anything that a woman does. So to date, I think it's worth saying we've invested in 24 companies. I know Alma has many more in their portfolio, but we have one femtech business. People are always a little bit surprised. And so, deals will come in and because again, we're quite curated and we only show a small portion to our community, we always have to think, what will most people want to invest in? And most people want to invest in the future of people and the future of planet. The world's on fire. The robots are coming for our job. So that's pretty much what we see, broadly speaking, those categories. So our investors invest to see the world that they want to see be built. And that is not as much enterprise SaaS. We have some of that, but it tends to be more tackling bigger problems. So half our portfolio is climate. And it's anything from consumer, how you change consumer behavior, all the way through to very, very deep science.
Amazing.
Fixing the agricultural system, for example.
What do you see on that front, David?
Well, yeah. The community in Alma has invested in about 180 startups in 4 years. So again, the value of a decentralized investment platform versus a centralized one, and they ended up raising so far 200 million follow-on funding. So there's a lot of especially if part of it is 4 years of investing because you come in pre-seed, so it takes time to materialize. In terms of patterns of industries, it's really funny because it's more talking to people's biases and versus than to the deals that we see. We've seen, on average, I think about 1,000 deals a year, all with at least one female co-founder. And it's deep tech, it's biotech, it's enterprise SaaS. The way I keep telling it, women are people that work in the same world that men do.
Exactly.
And solve the same problems that men do. And yes, they also see problems they only face, which is usually referred to as the femtech aspect. But you're not surprised if two guys are building a femtech solution. I think if you look at the entire scope of it, something like 7 to 10% of our portfolio is within the femtech aspect of it, but we have climate, I think, is about 20%. Enterprise SaaS, AI, there's a multitude of solutions. Even in terms like some Almas end up, so it's really interesting about the ripple effect on Alma. There's about 12 VCs that started funds after they became an Alma, and they're all solo GPs. And there's about 15 different investors across funds in Europe who were Almas before they joined the fund. But there's also about 20 Almas who started startups. So there's a lot, and again, different people. Some of them were already founders in the past and so on. But if you even look at how people invest and what they build, it's a multitude of aspects. I think the benefit we have is because we've seen like close to 3,500 deals that it's like, it's not a pipeline problem. It's not industry focus. It's like women build stuff that matters for everybody, because like 51% of the population, they tackle the same thing. The only thing is they also see problems that you don't see.
Yes.
Because nobody solved that before. So nobody built in femtech. So suddenly, like, there's a lot of problems in that.
Yeah.
And of course, like, if it's a good enough, valuable problem, we'll solve, pay for it, and scale shit tons of money into it.
Yeah. I can just follow up on what David said, because you asked us why it matters about women investing. It matters. We can talk about all the data and diversity, but I think at its core, women are half of the population. Again, world on fire, robots. Wouldn't it be good if we let all of the population come up with solutions?
Yeah.
And wouldn't it be good if all of us sat around the table and voted with our money for what we thought would, or put bets on many things? And it's not just one narrow view of the world that is funding and solving the problem.
And just to double down on that, I think every time I meet people in the industry, there's a lot of questions about, oh, is it just an impact cool thing, David? Why are you doing
Yes.
that? And I was like, I put aside the ignorance of it, and like, because there's enough data. Like BCG came out with the data last year to prove like women's-led startups bring 2.5x on the dollar for whatever they get invested compared to men. In 21, there was a research showing that while women only get 2% of VC money, 14% of unicorns were co-founded by women. So there's a lot of stuff out there, but the data doesn't matter. It's a perception thing. And here's the thing. If you don't care, perfect. Let me do all the money, get all the money. This is the greedy VC part of me. It's like, I don't need to convince you that you should do this. You don't care, perfectly. That means there's a lot less money going into this, a lot more I can take, and a lot more shit tons of money that I can grow. And when I say I, is everybody that invests in this. My job is not to convince you that you can make shit tons of money of this. The research is there. You don't believe it? Excellent. This is a great, and this is from finance people, like arbitrage model. Women are usually 10x more prepared when they build a business because they prepare. Well, and again, this is averages we're talking about. So the risk of execution is decreased. Women also, when they take a commitment, they're in it for the long term. So they think 10 years ahead. And in the sadness of it, the market downgrades valuation for women-led businesses. So as an investor, that's the second arbitrage. So with the same 100K, I can get a lot more in a more successful, again, statistically business. If I need to persuade you on this, you're not the right investor I want to talk to. Next, please.
More fool you. Yeah. I spoke on a panel fairly recently alongside a woman who works for Morgan Stanley for their Inclusive Ventures Lab, like an accelerator program they have. And she was saying about how men perceive female-founded businesses as a more risky deal, when actually all of the data, as you just said, David, speaks to the opposite. But that in a downturn, they even more become risk averse and shy away from the female deal, when it's shown that even though female founders outperform male founders, they do so at an even higher rate during a downturn. Like we double down when the going gets tough. So yeah, it's funny, that cognitive dissonance that you mentioned earlier between
it goes back to the fallacy. But it goes back to the fallacy that people have that investment in venture capital is data-driven. It's not. It's people-driven. And it's like, this is going back to why we created Alma and why we see the way to change the system by having thousands of Alma all over the world. Our mission is to generate $1 trillion in women-led wealth by 2050 and invest in 10,000 female founders by 2035. And as a community, as a global community, and the way to do it is by creating thousands of angels within the Alma community and working. We believe in a rising tide raises all boats. So working with all the syndicates out there and being the place that if you want to see great deal flow that can make shit tons of money, also has a female co-founder, this is the place to be. And like going back to the same thing, I don't think in the stage we are today in the industry, with more and more, like the next decade is the biggest shift in private wealth, where women are going to own more than 50% of the hereditary capital coming in. Like they don't need to be convinced that there's money in women, that they've been overlooked, the problems they've been solving. But even like as a general, like, and this goes back to every time I talk about the challenges of female founders, every woman I talk to has the same experience. It doesn't matter which industry, they all get it. The men were, again, and this is from a privileged position, we've never experienced the problem, so they didn't know it was a problem. But now that we know, there's a great opportunity to tap into that. And we're not in a place to convince people that it's worth your time and money. Like, keep not doing it. Excellent. We'll get more money in.
And how are you both seeing the market for investment generally this year? I know last year was a much rougher ride, but yeah, how are you finding 2024 to be?
Marla?
Well, I mean, I sprinted through Q1, and I always think, like, David and I were at an event yesterday, and he made a comment which I love, that whenever you meet another investor, you're like, what's your CRM? And that's exactly it. Like, we're all trying to figure out how to work more efficiently. So I always assume that it's me, but then actually a male investor who I really, really admire apologized and said, God, Q1 has been insane. I was like, oh, good, it's not just me. You know, he got back to me a month later on a deal. So it was so busy in Q1, but I don't think that's, so I have feelings, but I do love data. So I felt like it's busy, busy, busy. The sentiment is changing. The quality of the deal flow is starting to improve. Investor appetite is starting to improve, but you know, the macro environment is still a bit jacked, for lack of a better word. So I went and looked at PitchBook's Q1 2024 review. I don't know if you looked at the data. So total deal value in Europe, the European, it just came out, I think, yesterday, the report, total deal value is up 20%, but deal volume is down 25% across Europe, which they say, well, you know, maybe flight to quality, maybe bigger rounds, holding up valuations for the best companies. But then, of course, we always have to look at the female founder figures, which are always perpetually worse. So there's been a 30% decrease from year on year, so from Q1 2023 to Q1 2024. And Ian, I'm just looking at my scribbles here. Women founders, so sole founders and joint founders, represented 16% of the volume of deals in Q1, but just under 12% of the value. And PitchBook says, overall, the disparity between female-founded activities and the wider ecosystem remains large. So I think that pretty much sums it up. You know, the market's starting to improve. It's not there yet. And as always, women bear the brunt of the tough market, and they lag at every level, at every time, in every market behind their male peers.
David, what are you saying?
Yes, and we still did 15 deals in the Q1. So I think going back to Marla, Q1 was like fast forward. I think on the market side, 24 is definitely better than 23. Yeah. Early stage was always not a numbers game, because it's all about people. It's about like, so there's less fluctuation compared, but it's still like, since angel investing is about my own personal money, if suddenly like my entire savings took a dip, will impact. It will make me rethink everything. But
Yeah.
there's so many things that impact you as an angel. Like we had an angel that her house burned down. And like, oh shit, there goes angel investing. But she came back after a year. It's okay. But again, like because it's individual, unlike funds who have like allocated capital, but even then, LPs may say pause because the market crashed and then I have too much exposure. And 24 is definitely better than 23, but fundraising has gone back to focus on product. And I think this is the benefit of the way I see it in female-founded businesses, because they don't chase vanity numbers. They actually build businesses and build products. And like anybody that fundraise knows that it's great to get a TechCrunch article or a cool, hey, they just fundraised, but it doesn't move the needle the next day when you wake up in the morning and you need to like, oh shit, I raised $1.5 million or 10 million, and I'll need to do everything. And like the day-to-day grind and building a product. And I think the women never had the privilege of not doing that. So when the economy is down and investors look for good businesses that have thought through all the stuff, I think this is a stronger position to be. Not to say fundraising is easy. It's never easy. Definitely when the economy is down, but I look at it as a lot better in terms of like, you know, people that suffer through training when they go to war, it's basically they're better prepared. And wartime CEO is a definition coming from the US about what a startup founder should be.
Oh, interesting. As in one who built through a recession?
No, but in terms of like, you feel at war as a CEO every time attacked. So your decision need to be focused, organized, move and prioritize very fast. And like a lot of the stuff that are naturally happening the moment you don't have enough resources and you need to 10x execution.
I see. And what advice would you both give to anyone that's an aspiring angel out there, right? Who's thinking, and maybe this is the path for me. Perhaps Marla, like you said, is maybe not ready to take action yet because they feel they need to learn everything before they get going. What are some of the steps that people can take to actually take action, actually get stuck in and start their journey?
Well, we had a member of the month featured recently. One of our, so we try to feature women who have been angels for a number of years. How did they start? What is their advice? And so I am shamelessly stealing Marcella's advice, who talked about why she started angel investing, which was she's South African. She came to London and she said, I looked around, I went to all of the events, and I didn't see anybody who looked like me solving problems for solutions like me. So I decided to start. And my advice, this is Marcella's advice, which I told her I'm stealing, is start small, but start. Like there is no, so yes, you can prepare. Yes, I'm not telling you come in and write a check, on day one. And I always say to, prospective members, I'm not going to hold you up by the ankles and shake money out of your pockets. But you can come, you can listen to pitch events, you can learn from people, but you don't know what it's like to be an angel investor until you write a check. And you don't know how to become a good angel, a good investor, until you invest a lot. And that is what low ticket sizes, and that is what community gets you, is the ability to learn from others. But my advice for people is obviously to reach out to Alma, HERmesa, any other group. There's fortunately more of us, not enough, but more of us. Join all, we don't care, just start.
Yeah, I think the best, exactly my advice. I think it's difficult, but the best way I found is so I'm a dad for a 6.5-year-old Nathan. The best example I say is everybody can tell you what being a parent the first year is, but no matter how well you read the books and all the advice you get from your friends is, holy shit, this is amazing and terrifying at the same time. Yes. However, till you do it, and again, there's Angel Investment School that does that. They're just opening a new platform. There's, of course, HERmesa, us. There's Angel Academy, who's been the first female-focused syndicate that just celebrated 10 years last year. There's a lot of things out there, but it's like you need to find the time and commitment to put into it. Yeah. And again, there's different benefits to it everywhere. Like joining a syndicate is, I just want somebody to collect the deals. I don't have time to all of it, and tell me what are the best things. If you want to do something else, like, and again, some people end up investing in funds that do something they believe in. So there's a lot of ways to do that, but I think the main thing is talk. And if it would be helpful to anyone, David at alma-angels.com, happy to talk to you.
Love that. Thank you. You're right. I think, yeah, just doing it is so important, and learning through doing. And I think when I made my first investment, it was this moment of, oh, that was it. Oh, okay. Right. You build it up in your head and overcomplicate it. And ultimately all it is going on your mobile banking app and transferring some money. And that's it. You've done it. So yeah, I definitely built it up a lot more in my head before I actually made that first investment, and then thought, and I think that kind of, yeah, then makes you go, oh, well, I'll do another one then, because it's really not that hard. Yeah. Okay. Perfect. And you mentioned there, Angel Investing School. We've got Andy coming on the show in a couple of episodes' time to tell us all about the new platform. And is there anything in particular that you want to share?
Andy also started the same year.
Oh, there you go. Really,
we're all. I think I don't know if there's something in the water, or everybody got so fed up that we were like, again, somebody should do something about it, and it was great that somebody was in the water, and that we all decided to tackle it from a slightly different angle. But yeah, something had to be done, and we're doing it.
Fantastic. And is there anything you're excited about for this year that you'd like to share? Anything happening in your respective communities? Anything coming up that you want to share?
We are really doubling down on climate this year. We are increasingly, again, we have very, very good sort of investor HERmesa fit. We're well open to everyone, but what we find is sort of a certain profile of people come in, and a lot of those people, as I said, have been entrepreneurs, and increasingly people coming in with a lot of climate experience. And that is fantastic, because it allows us, we operate on a model that we always have to have an expert in every deal. And so not only are we building our expertise on the investor side, but then because of sort of the way we work as a community, we can now do more climate deals, a broader range of the type of climate deals. And so we are really excited to be digging deep into this. We're launching our first sort of climate sub-community group within HERmesa. And I don't think we're going to turn into a full climate fund, but I am really, really excited about the expertise we have and the interest we have to go more, both broader and deeper into this huge field.
Love that. I saw it's next week, isn't it? I will be there next Wednesday.
Fantastic.
You're there. David, what about on Alma's side?
So we're building a lot. I think one of the most interesting things for us in terms of the upcoming year is how do we professionalize? Our mission, the way we see it, is we shouldn't take the investment decision as the founding team of Alma. We should empower all the angels. So we're actually building the plan on how to invest in 10,000 female-led businesses by 2035. And a lot of it is finding the right partners and productizing a lot of the work we do behind the scenes. So it's the nitty-gritty of how do you actually build something that scales, but to empower more and more women building startups. So super excited with this. We're having, I would say, anything between 3 to 5 events a month. So, something about 40 to 50 due diligences per quarter. So a lot of it is how do we get that and continue to scale. We want to get to a position. Currently, we're on the pace of investing in 1 startup per week. Our vision goes to invest in 20. That means reaching global deal flow, but operationalize and scale that. So there's a lot to be excited about.
Absolutely. Well, thank you very much to everybody for listening. Thank you so much to Marla and David for sharing all of their insights, their experience with us. That's been hugely valuable. Thank you so much.